Welcome to Equity and Ag, your daily recap of the stock market and agricultural futures. Let's break down what moved the markets today. Row crops were relatively quiet overall at midweek, but there were still some important developments underneath the surface. Wheat led the grain complex higher after successfully defending trendline support earlier this week. Soybeans managed to recover from early session losses and continued their recent push higher. Corn, on the other hand, struggled to gain traction. Even after Tuesday's WASDE report showed a bigger-than-expected cut to U.S. ending stocks. The problem for corn bulls is that we're still looking at what would be the largest supply in 7 years, and that continues to limit upside potential. Outside markets were mostly supportive. Energy prices stayed firm amid ongoing geopolitical uncertainty, particularly with negotiations between the U.S. and Iran surrounding the nuclear program. Meanwhile, January's jobs report came in much stronger than expected. Job creation surged and the unemployment rate moved lower. That strength pressured the bond market and pushed yields higher, as the softer labor market late last year had supported the case for potential rate cuts. Let's go commodity by commodity. March corn closed down 1 1/4 cents at $4.27 1/2, with May down 3/4 cent to $4.36 1/2. Despite the lower close, corn did recover from its daily lows, which is constructive from a technical standpoint. The market worked back toward trendline support near $4.27, suggesting buyers are still defending that area. For now, the upside target remains the 50-day moving average around $4.36 1/2. If prices can push through that level, momentum could start to shift more firmly in favor of the bulls. March soybeans finished at $11.24, up 1.5 cents. May beans added 2 cents to settle at $11.39 1/2. That marks gains in 6 out of the last 7 sessions. There were no changes to the U.S. balance sheet in Tuesday's WASDE, so this rally isn't being driven by new USDA adjustments. Instead, the support appears to be tied to concerns about soybean quality in parts of Brazil following heavy rainfall during the growing season. Export activity was quiet on Wednesday. USDA reported daily corn sales, but there hasn't been fresh soybean business since Monday's 9.7 million bushel sale to China. As we move through February and into March, weekly export sales will become increasingly important. Traders will be watching to see whether the U.S. can pick up additional old crop demand while Brazil's harvest moves forward. If quality concerns in Brazil become more widespread, we may start to see that reflected in export pricing. Right now, Brazilian FOB offers remain at a noticeable discount to U.S. prices, so that spread will be something to monitor closely. March Kansas City wheat climbed 8 cents to close at $5.38 1/2. Chicago and Minneapolis contracts also posted gains. After Tuesday's mostly neutral WASDE report, wheat seemed to find support from technical buying. KC futures tested and held trendline support in the mid-$5.20s earlier this week, and that defense triggered fresh momentum higher. The next major hurdle is the 200-day moving average near $5.47. If the market can break above that level, the upper end of the trend channel around $5.55 becomes a potential upside target. Wednesday's slaughter totaled 116,000 head, 3,000 more than last week but 4,000 fewer than a year ago. Cattle futures were sharply higher across both live and feeder contracts. Live cattle finished up between 120 and 355, while feeders gained 267 to 365. Beef cutouts are expected to close mixed, with light to moderate box movement reported. If you found value in today's update, make sure to hit that like button and subscribe so you don't miss tomorrow's recap. I'll keep breaking down what's moving grains, livestock, and the broader markets, so you can stay one step ahead. This content is for informational and educational purposes only and should not be considered financial or trading advice. Futures and options trading involve substantial risk and are not suitable for all investors. Always consult with a licensed financial advisor before making any trading decisions.